All right. Good morning, good afternoon, and good evening. Welcome back to the African Crypto Warlord Show. Today, we're going to try and add some utility to understanding Dixie. I'm going to call this my masterclass. Why? First off, because I live in an economy, well, two economies that suffer from Dixie going up. Right? And I'm going to give you pretty much just an inside edge or general observation as to why Dixie is important. All right. First off, it affects Forex. Secondly, it affects the price of stocks. And technically, it affects the price of Bitcoin. Okay. So from here, all we're going to do is we're going to watch the supply distribution play out. And within this Laplace distribution, you just got to know that the colors that you'll see are the most important lines. Can we speed this up? Okay, this is going to take forever. Okay, why is Dixie important to watch? Okay, first off, as an economist, as Dixie goes up, as this goes up as it did now here in 2015, it technically means that America is getting stronger to the rest of the world. It doesn't matter what Americans are dealing with. Like they could have a bad president, they could have COVID or whatever, all right? But it is a metric that you can use to see if it is outperforming your local economy. So my two local economies are Zambia and South Africa, okay? I have the charts up here again, also on a 7-day, with a 7-day Laplace distribution, just so you can see how we're going to work Dixie into these guys. This is a very basic understanding of how to read Dixie. And what I will do is I'll drop a link down for the first theory of Dixie, which is called the dollar Dixie smile. Okay, it'll be in the links below. Now, the general observation that you're going to see, let's just take this down to the most simplest form. A first world economy versus a third world economy. So as Dixie is here at 103 in 2017, you would expect your third world economy or Forex pair to be absolutely weak. So let's say in 2013, your $1 equaled 1 kwacha. As Dixie goes up, you would naturally expect that your $1 is going to be able to buy you 2 kwacha or 2 rand. All right. Now, I can get into some, technically it's my theories, but I don't necessarily think it's theories. I just think it's the way that the IMF and the states deal with people that are in debt. So I've got three very good examples here of how to use Dixie alongside Dixie and the S&P 500, Dixie and a country that suffers from corruption like South Africa, so Dixie versus the Rand, and Dixie, the dollar, versus the Zambian kwacha, which is pretty much right now, because I pretty much live there, I can see that America is wanting to become friendly with Zambia. It's a very good country. It's a good place to invest. They've got a lot of minerals, etc. All right. So they want their hand in the game in the long term. Because remember, America doesn't plan for tomorrow. It plans for 100 years from now. Okay. So as I'm saying this, what we could technically imagine is that we can see that Dixie hit 102. And as it comes down from 2020 to 2021, we would expect third world economies to get stronger. Secondly, we would expect the stock market, the S&P 500 or anyone else below it, to rally. Now, this is the reason for this is that as the S&P 500 rallies, because there's so much money involved in it, they're going to lock their liquidity into stocks. Okay. And if you take $100 today and you invest it in, and another $100 tomorrow, another, all the way down the line for 30 days, the general observation is that there's more dollars on the market because you've traded dollars for a stock. So the stock is on the market, okay, which means the stock is on the market and the dollar is on the streets. So an economist would say the more fiat there is on the street, the weaker the currency. Okay. Now you're getting stupid observations from someone who actually did pretty well and had a good mentor when he was in high school. All right. So let's cut into this. All right. So this is Dixie on the 7-day Laplace distribution. As Dixie strengthens, we're going to expect America to get stronger to the rest of the world. The observation you have to see is as Dixie goes up, you technically want to expect the price of the stock market, the S&P 500, to drop. Okay, because people know in this case, people will know holding dollars is actually more beneficial than holding stock. Okay, so let's get into this. We'll just leave it off at 104, and this will technically be an analysis after I've explained a general theory. Let's open up the first theory that I'm going to talk about. It's called the dollar smile theory. All right. And if we were to just scroll down, I'll leave it in the links below, or I'll leave it in the links below of this video. And we're going to look at this pendulum. USD strengthens due to risk aversion. All right. So as the stock market starts to go sideways, people are taking profit. Okay. Which means there's less dollars on the street, which technically means Dixie goes up. USD weakens to new low due to weak economy. All right. That's at the bottom here. This is called a capitulation. Okay. In this part of the curve, you'd technically expect that your S&P 500 and the dollar against the rest of the world is going to get stronger. Okay. And due to the dollar being stronger, and all property portfolios and all the shit, it naturally the next leg is USD strengthens due to economic growth. Okay, so this will be because the housing prices in the States have risen and all this other jazz. We don't need to get too technical about it today. But as the amount of USD that's needed to buy the next product, let's say you sold stocks as soon as you saw USD strengthens, you sold stocks because you could see the stock market was starting to weaken. All right, there's more demand for the dollar on the street. Okay, and then the next leg is because people are holding dollars, they don't necessarily want to get 5% because you can beat the market at 5% per annum. All right, so USD strengthens to economic growth. So now people are taking those USDs because they know they can get better than 5%, and they're going to invest them into housing. They're going to invest them into startups. They're going to invest them into whatever the hell it is. Other currencies that are getting, well, not right now. Other currencies that are losing out, they're going to take their profit and they're going to hold dollars. So that's what starts this side of the dollar Dixie smile. Now, as that happens, America takes a step up. Okay, unless your country is friends with the American government. Sorry for that. Now, let's get back into the charts. All right. I have 3 examples here, S&P 500. So what's a general observation? If Dixie was to go from 103 to $111, you're generally going to expect the stock market to go down and the price of other currencies that it is being compared to weaken. Okay, so Dixie up, we're going to expect the S&P 500 to go down. Natural profit taking. Okay, here again, this is to Dixie. So that's just the S&P 500. As Dixie goes up, it gets stronger. A majority of people are willing to take profits from the stock market and just hold the dollar because why? The stock market's getting bearish, let's say. Okay. Now we're going to compare it to a currency that I have to live with as well, which is called USD Rand. So let's just say our next observation is that the dollar is going to get stronger against every other currency in the world. What are we going to expect for the USD ZAR? So my $1 ZAR in this circumstance, my $1 equals 18 Rand 98 cents worth of rands. Okay, so if the Dixie rallies, we technically expect, if you're looking at my $1 equals this many ZAR, we're going to expect that this is going to change from 18 to, let's just say, 20. Okay, and what is this? This is like a 10% move that's coming off of Dixie. Now, this is for pretty much every other currency in the world. Now, I'll show you an outlier. Your outlier could, in this is a very good circumstance. Okay, what can we see here? This is the Zambian government. This is the Zambian kwacha. So my 1 USD equals 25 units. If the Zambian government didn't come in and do good debt relief because they're in like over their head worth of GDP, worth of debt, if they didn't restructure their debt, no one would want to, even international investors wouldn't want to take the risk to invest into this asset. It pretty much trades like a cryptocurrency. Now, let me expand on this further. Earlier today, Zambia has said that they are restructuring debt on their euro bonds, okay? Which means it's going to, long story short, they've been allowed a breathing period in order to pay back the interest on the bonds they took with the previous regime. Now, because of that, as this goes down, it strengthens the USD. And if the US government or if US companies want to invest in a country, they need to be friends with the US. Said country needs to be friends with the US. Okay. So with the kwacha, for example, let's just expect the kwacha to go back down to 22 units. Whilst the rand is suffering from serious corruption, we're going to expect it to go up to 22 units. Okay. I don't know if this is making sense. Okay. Your general observation here is as Dixie goes up, you look for stock markets to go down. Okay. As Dixie goes up, you look for third world countries that suffer from corruption or third world countries that aren't friends with America to weaken against the dollar. Okay. Now, let's break this down into a general Dixie analysis as well, so that we can cover this for another 6 months. Okay, my last observation was for Dixie was 118, which is the outside of this cone pretty much. We nearly got there. I think we called it in about early 2022, around about here. We said we can't really guess Dixie because there's so many economic factors that come into play. But we are about $3 out. And this was during the vid time and all that jazz. So during vid time, dollar got stronger against the rest of the world. Doesn't matter how much you hate America, doesn't matter how much, if you live there, you don't like it. It got literally 6% stronger during vid time. Okay. Now, how this analysis works is we start at 21 day and we work our way down. But before I get there, as a cryptocurrency trader, this is a very interesting chart to look at, because your general observation is as Dixie goes up, you're going to expect naturally for Bitcoin to go down. All right, you understand? And here's a Bitcoin chart. Okay, and it's going down. Doesn't really matter. So let's start Dixie on the 21 day. And pretty much all I look for is the direction of volatility. There's 4 rules to this. The direction of volatility works in 4 ways, being when volatility expands and Pearson correlation is positive, we know it's in pump mode. When Dixie contracts in volatility, so it gets range bound, you could technically say, and volatility is contracting, whilst Pearson correlation is negative, we know there's a positive drift. So it doesn't matter how many bears come in on Dixie. It doesn't matter how many people are trying to buy up stocks. It's going to be range bound and try break out to the upside. Dixie, not the stocks. Okay. The inverse of this is as volatility expands and Pearson correlation, which is this thing over here, is in negative mode. This is negative mode. You're going to expect the Dixie to dump. What does this mean? This means it gets weaker to the rest of the world. The dollar gets weaker to the rest of the world. Now, what do we expect when the dollar gets weaker to the rest of the world? We expect, first off, third world currencies to get stronger. Secondly, we expect the price of gold to go up. Thirdly, we expect the price of the S&P 500 to carry on rising. Okay? The fourth rule, so that's dump mode. Then we're looking for negative drift. Negative drift is contraction in volatility whilst positively correlated. All right, so I'm going to shuffle from the 21-day down to, what is this? The 1 minute. I'm going to shuffle from the 21-day down to the 1 minute. And we're going to pull a direction out on Dixie, because in these trying times, I can see that Zambia has made a good deal with the IMF. America likes Zambia, okay? But I know that America doesn't like South Africa, okay? So if the Dixie strengthens with a friend, the friend being Zambia in this case, we're going to expect the Zambian kwacha to strengthen with the dollar, all right? So even though the dollar goes up against the rest of the world, but because America is giving dollars to Zambia, it allows it to take the kwacha off the street, which means the kwacha can strengthen with the dollar. This is why you want to be friends with America. Okay. S&P 500. I have two targets here. If it fails 5,153, I'm expecting a pullback down to $4,762. General observation off of this is if Dixie goes up, we're expecting the top side of the cone. All right. Let's just do a quick measure move here. I can just do it with this one, from here to here. We're looking at a minus 8% if Dixie goes up, all right? Now, for South Africa's case, because South Africa is trying to smuggle things through to Russia and all that jazz, and America doesn't really like them, is trying to actually bust them on their intelligence, we're going to just say, bang, this is our next best place, is 21 Rand, all right? $1 equals 21 Rand. What does this mean for the people living in South Africa? The cost of the imports increase, which means the cost of the living increase, okay? So it's bad for South Africa, okay? In this case, because Zambia is friends with America, we're going to expect, right? They literally just signed the IMF deal today. So we'll just pull it from here, and we're looking for a mean reversion down, okay? We'll just call it back into the mean at minus 10%. This is good for the people of Zambia. It means they can import goods from America, South Africa, whatever it is, for cheaper, which means their cost of living drops. Okay? If you earn in dollars in Zambia, you're obviously not going to be too happy about this. Now, let's do the shuffle. 21-day Dixie has positive drift. All right? So we're expecting it to climb up further with a mean reversion and a mean reversion. This thing is not giving me a date on which it prints a new one, 24th of Feb, 04 March. So the 25th of March, it should have actually printed a new one. So we'll have a look. But from the 25th of March, what am I expecting upside? I'm expecting more upside. All right, mean reversion, mean reversion, mean reversion. This means the dollar is getting stronger to 50 other currencies in the world. Okay, so you need to be friends with them so you don't lose out. 14-day has contracting volatility, was positive drift. What are we expecting here? Contraction in volatility was positive drift, stuck in a trend. We're looking for small candles up, all right? Baby steps in order for America to get stronger to the rest of the world. This is the 7-day. All right? 7-day. What can we see here? Is 50-50. It is literally just shy of 0.3% in order to break out into a new range to have price discovery on the chart over here on the far right that is under skew. All right, so if the dollar gets above 105 or 193, what do we expect? Currencies in the third world are going to get weaker. Bitcoin's going to get weaker. The stock market is going to get weaker. Okay? And if Dixie was to pretty much just pull out an 8% move here, which I'm guessing is an 8% move, into here, just shy, 7.7. If Dixie was to pull out a 7.7% move, we're going to go back to the stock market, and we're going to, let's just keep it really simple today, we're going to look for a minus 7.7% move. All right? Which is pretty much setting us onto the top side of the cone, which is pretty much setting us onto a very interesting side of our probability cone. Now, that was the 14-day. All right, 7-day, 50-50. Let's move into the 3-day. I should actually have the 5-day up here. That'll give me 2 minutes. 5-day is 50-50. 3-day, 50-50. No, 50-50 under current circumstance. If the Dixie holds above 104, we can expect the rest of the world's economies to get weaker. All right? Now, let's pull up the 24-hour. Go away. Pull up. Come on, dude. All right? Dixie is 50-50. Dixie is technically in a pump mode, losing correlation on the 12-hour with mean reversion and mean reversion. So that backs the 21-day, the 14-day, which could allow for the 7-day, the 5-day, and the 3-day to align for Dixie to get stronger against the rest of the world. What can we see here? 6-hour, 50-50, but DLP is mean reverting. The only target that I have for Dixie is 103 to the downside here. That could be for bad news. This could be a target for the next election. All right, so during election time, people lose faith in the economy, whatever it is, we can expect 103 for Dixie. All right, 3-hour, again, technically 50-50. But the next best phase for Dixie is contraction phase and moving into negative. And PC moving into negative, which would cause a little bit more positive drift. All right. I will. Sorry for the dogs barking and the crickets going. Okay. Again, Dixie and 50-50. Again, Dixie and 50-50. This is on close, by the way. Dixie did lift up, but didn't have a trend. All right. This is an expansion mode, so you want to look for the next day's first 15 minutes to see if it's going to push DLP through and a mean reversion through. 5-minute expansion mode in trend. Definitely helps a 15-minute. Now, if Dixie goes from here, now we're comparing 1 minute Dixie to Dixie on BTC. BTC, sure, can get to $70,600. But if you know that Dixie is more than likely trying to push up to the upside, all right, which it will pretty much have a mean reversion here. So if it holds above 104,200, okay, 104,281 for tomorrow's print, we're going to expect Dixie to get stronger, which would mean Bitcoin go down. Very rare that it doesn't, that correlation doesn't work. If you want to get technical about this, you can have a correlation coefficient between Dixie and Bitcoin, Dixie and Kwacha, Dixie and S&P 500. And every time the Kwacha goes down, Dixie goes down, whatever it is, you want to see if they are positively or negatively correlated. So this will be lesson 1 of the dollar Dixie smile that we can see here. And then I will introduce you to other methods I've learned within my time of trading the last 8-9 years. All right. Dollar Dixie smile for easy use of access to understand a general economic theory. Here you go. Global recession, slowing use, all the good shit. The dollar never loses out against the rest of the world. And this is why the dollar is the number one thing to trade in. Given it can be traded in oil and all this other shit. But it doesn't matter if other countries take on oil. The dollar is what all loans, pretty much 90% of loans are done in dollars. So all Forex has to work its way back in order to pay back those dollars. Okay, the demand on dollars might not be today, but on that loan it could be for 20 years. Okay, so the Dixie always gets stronger to the rest of the world. If you found this information helpful, please do like and subscribe. If you would like to join the Discords that we have, first off, we have Alpha Trading Tools, which are pretty much the tools you're looking at here today. All right, they give cones and all that good jazz. Or you could join my personal Discord, which you'll see the links below too, so that I can explain whatever the hell you need me to explain to you. I have the charts. Thank you all for trading. It's been a good few years and shot. And if we can lead you into alpha trading so you can make your own observations, that would be perfect. Much love. African Crypto Warlord out. Bitcoin analysis, all that jazz coming up shortly.